my name is Maria and I'm a team member of Digital Ways, a financial services provider and investment manager for the future economy. So today we're here with Bisang, chairman of Digital Ways. We're going to discuss today financial industry trends and alternative investment products like SVBS One Disruptive Tech Portfolio. But first, Louis, could you tell us a bit more about yourself and present Digital Ways?
Hi, Maria. Pleasure to meet you here. So I got a background in law and in the fund industry, hedge fund in New York and Swiss fund company, and also in private banking. I'm still with Turcom Private Bank, a small boutique private bank. So that gave me first touching base with startups, which we onboarded at the bank, and led me to algorithmic trading and digital assets as well. And out of this, digital waves evolved with the goal to make ventures like these startup companies and innovative assets, digital assets more accessible. So we did a own issuer platform to securitize actually any kind of assets you can imagine, but also to facilitate and provide services of direct investments, not only via products, not only via our platform, but also fund structures and ultimately managing portfolios in that space.
Great, thank you for a great introduction. So I guess we can go directly into the financial industry recent trends. So a lot of things changed in the technological field in the last decade, and of course it influenced the financial industry a lot. And there are new directions for development and new products. So could you share your perspective on how this industry is changing and what does this mean for Digital Waves and companies like Digital Waves?
I mean, financial industry as a term is quite broad, so we need to narrow it down a bit because the whole financial industry as well is under constant change, and the change is accelerating, I would say, in different ways. I mean, what comes first to my mind is regulation. So everything is getting more regulated, which is good for sure. And that applies especially for asset managers in Switzerland as well. So Digital Waves is a member of VQF and regulated as an asset manager in Switzerland. We are just about to upgrade our license and being recognized by FINMA directly. So that's one side. That doesn't apply only to asset managers, but to banks as well. And the other side that comes to my mind is technology. So what's quite new in recent years is neobanks. You got a lot of trading platforms. So everybody heard about Robinhood and what kind of trading happened there with Wall Street Bets, for example. But you got also a lot of brokerage platforms like Interactive Brokers and so on. Robo-advisors is a topic. It's not yet there where I would have expected it, but kind of this is a retail arm of what's happening in the prop trading sector, I would say, like where algos are dominating and producing a lot of volume. And when you look at asset classes, it's not just like there are some new asset classes coming up. I mean, some asset classes are not new, but are getting more attention, like private equity, venture capital, real estate is booming. But also new asset classes like blockchain-related investments, especially cryptocurrencies. You could say it was doomed for many times. Some people jumped on the train a bit earlier, but I see a broader recognition cryptos in all kind of different investors phases, right? Then, I mean, when you say changing in financial industry and what it means for asset managers in general, maybe you have to look at the markets as well. Despite pandemic and global halt of the whole economy, markets are going upwards, right? It's always going north. And inflation must come. It's already here, but it will increase. So it's a future outlook that is kind of uncertain. A lot of people predict a crash quite soon because some key figures, ratios are way off where they should be. And fixed income on the other side is not generating any yield, right? So you have negative interest, have inflation, and I just recently heard the phrase again, cash is trash. So there's not much to gain when you do fixed income, and holding cash is not a very good idea. So asset managers shifted quite a lot to alternative investment products. That could be structured products like convertibles and so on. But as I mentioned before, real estate, commodities, and also like all tech related, which is like cryptocurrency investments as well. So there are studies around that just a small portion of alternative investments and also crypto related investments have a significant potential to boost your return of your overall portfolio. So alternative investments, they are on the rise, and most of them are tech related, I would say. Also tech stocks had a quite a boom, especially last year, but alternative investments with a tech related background are definitely on the rise.
That's great. Thank you for such a overview of a quite a broad trend in the financial industry. And as you mentioned, the alternative assets, it's important also to discuss what Digital Waves is doing in this area. So recently, Digital Waves launched the SVBS 1 Disruptive Tech Portfolio Certificate, and it securitizes a selection of promising tech companies. So could you give us some insights on the portfolio?
Sure. What do we mean with tech? So all of the companies, they have are operating on the intersection of artificial intelligence, Internet of Things, blockchain, or providing a platform. It's kind of deep tech companies. They are from all kinds of different industries, solving real world problems, but facilitating this with like a new technology approach, and so in a more efficient and future-driven way. It's very diversified, so they are coming mainly from the US. So, but globally, we have some companies from Singapore, from Europe, but mainly US, as I mentioned. And sector-wise, it's also very diversified. So they have this tech stack in common, but industry-wise, they are very diverse. I'll give you some example. There's Artea, for example, in art, a very buzzword right now is cybersecurity. There's one company coming from that space. Another one is in healthcare, Apotheca. We got one for media, then logistics and transportation. Fintech, DeFi platform is among the portfolio companies as well. An AI platform for education, like making education more efficient, or simple data management network, or RegTech, as we discussed before. Regulation is increasing, so NetKey, for example, is tackling these issues or these new challenges, let's say, in a technology, special technology approach. Yeah, so it's more than 20 companies and quite the portfolio. We did due diligence all of them. We KYC'd them like multiple times, but I have to mention it's a cooperation with a network from Silicon Valley. So the SVBS guys are experienced VCs and fund managers coming from different industries. They get together to build that portfolio of tech companies with a focus on blockchain companies, but actually in the portfolio, it's a mix of deep tech companies. And the good thing is they invested themselves, not in all of the companies, but most. And so they got skin in the game. But all the companies are coming from that network and are facilitating themselves as well. So there's a synergy effect. The SVBS partners from Silicon Valley, they try to connect these companies as effective as possible to show them go to markets, to help them regulatory-wise, to facilitate the projects between the portfolio companies. And they have been in contact with these companies for years. I would say some of them 4 years, and the earliest one 1 year. So they know them very well. They did the initial research on the team, on the business plans, on how they're doing. And in our partnership, Digital Waves did the same again. Our issuer had to prove them as well. So we got a very comprehensive portfolio together of companies. And maybe also to mention that it's not done with their portfolio. So from Silicon Valley, there should be deal flow coming constantly. So the portfolio is about to change, it's actively managed, and to evolve over time.
Amazing. It sounds like an excellent combination of various companies from really different industries. So are there already any updates on how the companies are doing?
Updates, yeah. I mean, there are constant updates. It's very quickly moving. So I struggle sometimes to keep up to date, but we have a team together who collects all the updates. What comes to my mind first is Apotheca, a healthcare record provider, just announced a cooperation with the LA Clippers. So they will track the health data of all the team members there and the whole club. That must be very exciting. It's also from a marketing perspective, must be very good for Apotheca. The second thing, Reach Network. That's a climate solution marketplace, a platform, Reach platform with their own token as well. And they just listed the token on decentralized exchanges, so multiple decentralized exchanges like Uniswap, Osmosis, amongst others. And there is Versus Logistics as another example. They just signed a 25 million contract with the distribution system of Amazon. And they have some other interesting partners in the pipeline where they do projects which should lead to such contracts, which they signed just with Amazon distribution. And that's with Johnson & Johnson, AstraZeneca, Honeywell, and others. So the pipeline of deals is there quite full as well. And last but not least, just yesterday, I think, Meld, that's a DeFi platform, they announced that they closed their ISPO. So let me quickly explain what an ISPO is, because Meld invented the ISPO, its initial stake pool offering. They are operating on the Cardano network. The whole platform of Meld is operating there. And because of that, they are running nodes. So they are running servers to secure the whole Cardano network. And to do so, they need to stake ADA, ADA. That's the coin of Cardano network. And the more they stake, the more they can contribute to the security of the Cardano network. And as Meld is issuing their own token, the Meld token, in about December, I think, they reached out to the network, like offering them to stake Cardano with them, or like delegates Cardano coins, ADA coins to Meld. And in return, the network will receive Meld tokens. And within 3 months, and it's just closed yesterday, they managed to delegate $1.2 billion US. So giving them a staking return, they receive a return from doing so, receiving quite a nice return and making them super profitable already. So that's one, maybe the most amazing news, at least regarding figures.
That indeed sounds amazing, and we're sure that the portfolio companies are going to keep up the efforts, and we will hear even more amazing news in the near future. So coming back to the product itself, it's quite unique. And could you tell us what is actually different from everything else in the market?
Yeah, sure, Maria. So it's 20 plus companies we did due diligence in order to invest in their equity. So the intention is the portfolio holds a stake of each company. And the special thing compared to other venture investors or investment vehicles is that it's open-end. So normal venture capital funds are closed. So you got a lockup period for 8 years plus 2. You got have to hold your funds. You have to wait for capital calls whenever an investment is ready. You have to call your capital. That's the opposite here. So we have the portfolio ready. So the 20 plus companies are in the portfolio. Like our partners and ourselves, we can invest immediately. So it's not a black box what is coming. So you know exactly. But the portfolio is evolving over time. So it's open end. Technically, you can sell your share in the portfolio or a certificate of the portfolio anytime in a semi-liquid market, honestly, but it's not fully locked up like in normal VC products. I think that's quite unique, and you can check beforehand what the companies are, and the Silicon Valley partnership gives us a constant deal flow as well. So normally, after a certain investment size, a venture capital fund is closed, and then you wait until the exit of the companies. We have the freedom to buy and sell new companies or new underlyings, bring them in, less promising underlyings if there's an opportunity to sell them, or if they increase in value too quick and there's a cluster risk in the whole portfolio, we can sell them as well. And another thing is that normal venture funds ticket sizes are quite high. So I would say it starts with 1,000. It's quite common that you have to delegate $500,000 or $1 million plus for bigger venture funds. In our setup, you can go in with 10,000 already. It's very accessible, so we kind of democratize the access to such investments in promising startups, and it's also very easy accessible. It's got a Swiss ISIN, Swiss paying agent, so via your bank deposit you can just invest as you do in other fund structures, I would say. Yeah, and I think the good thing is we did a huge effort to select these companies. There's a whole process. SVBS started with the guys in Silicon Valley, so and then handed over to us. We have a common investment committee, legal due diligence done, business development or like business proposal checks done, and so on. So it's quite an effort to do that for 20 plus companies and not stopping here. So you, rather than doing yourself for a startup and going through the whole process, you can rely on our experience, on the experience of the whole team, and invest alongside us.
Amazing. Thank you so much for taking us through the product and explaining all in and outs. And I think this is everything we had to discuss today. So thank you so much, Louis, for an interesting discussion and the insights into the industry and digital waves. It was a pleasure to talk to you today.
Thank you very much, Maria. And whenever there are any news, we can talk again.
Sure.